Welcome to AllGen's Money Minute. So today we want to talk about the top 5 mistakes people make when investing in stocks. Obviously, the stock market can be a powerful tool for growing assets, for growing wealth. However, it can be a dangerous one if not dealt with properly. Okay, and we've seen this a lot lately as of the recording of this video. So Jason, let's talk a little bit about the top 5 mistakes people make that unfortunately leave a bad taste and a bad experience in their mouths when it comes to investing. So number one is typically when they're investing in the hot stock, or they get a stock tip. And Jason, you've had a lot of experience with this as a portfolio manager. What have you seen?
Yeah, so the big thing with this is if you're just an average investor kind of doing it yourself, by the time you get that tip, it's already gone up so much that you're buying usually towards the high.
Right.
And so, it's scary because you see, GameStop is one as of this recording that is, pretty popular, but you had it all through the years. You have different examples, and not saying that like Tesla is another example. Not that these are good or bad investments, but it's ones that had became very popular. Everyone wanted to invest in it, but by the time the average person got into it, that stock was just about to drop significantly.
That's right.
GameStop was a great example. It got up to a high of 500 when it became most popular, and literally in the next couple of weeks it was down to 50, a 90% drop. And you have people putting a ton of money in there. Their life savings sometimes in that, and lost almost everything.
That's right. So it's interesting because people sometimes ask, what's the difference between investing versus gambling? It seems very similar.
Yeah.
And Mr. Wonderful from Shark Tank said that the whole GameStop fiasco was more like gambling and going to Vegas.
Totally
that really wasn't investing.
Correct.
It was more emotionally driven and trying to get rich and quick and all that type of stuff. So that's mistake number one, is chasing the hot stock. Number two is chasing returns. Okay, and I see this a lot when we do financial planning. People have 401ks and they look at their list of investments and say, hey, this one did great last year. Let's invest in that.
That's right.
And this one did great last year. And Jason, that's awful. That's almost trying to drive a car while just looking at your rearview mirror.
Right.
It already happened, but if you do that, you're going to get into a car wreck moving forward.
That's right. Yeah, no, I remember back in 2007, 2008 time frame when people were doing their 401ks and they saw emerging markets made 100% in 2007. And so in 2008, when they saw that, they invested in that, and then in 2008 it fell like 70 or 80%. And so you're trying to chase what did best over the last year, but usually what happens is what did really well ends up then taking a big hit the next year.
That's right.
Yeah.
So that's number two. Number three is you don't have a properly diversified portfolio.
That's right.
And we see this a lot because people say, oh, I've got a diversified portfolio, but when you look at their stocks, Jason, they're not really diversified.
Yeah, that's right. So just having a lot of stocks, like if you had all technology stocks in 2000, right before the tech bubble exploded, which a lot of people had, then all those technology stocks fell during 2000 through 2002. So just having a lot of investments doesn't mean you're diversified. Or a common one right now, by 2020, 2021 timeframe, is people have a lot of large tech growth stocks.
Right.
And those have been what's done well, so they're just invested in that. But true diversification means you have growth stocks, you have value stocks, you have large companies, you have small companies, you have U.S. companies, you have international companies, you have emerging market companies, and then even having what's called non-correlated assets, which are assets that typically go up when the market goes down.
That's
and sometimes that can be like U.S. government bonds, it can even be gold or maybe commodities. And so that is proper diversification, owning some of all of those.
That's right. And then a fourth mistake is when people try to time the market. Jason, you and I have seen a lot about this. People ask me, is this a good time to invest? Or I think the markets are inflated. What do we know about people who try to time the market?
Yeah, well, this one happens if you're even doing it on your own or if you have an advisor.
Right.
And it's really tough because it usually occurs the most with people who are constantly checking their account or constantly watching CNBC or all these different financial networks. And sometimes it's really smart people, but they've allowed emotions to control their decision-making process, and that's usually what gets you in trouble. So they think things are too high or they think things are going to go down further and they try to get out. The problem is, it's not just timing. Like if let's say you're invested and you think the market's going to fall and you get out, okay? Even if the market goes down and you saved yourself some money, the problem is getting back in.
Right.
The emotional side of getting back in is very difficult. So we've rarely ever seen in our history of someone timing and getting out at the proper time and then getting back in when it's lower.
Right.
Even if they sell when the market's high and it drops, they hardly ever get back in.
Right.
And what happens is the market keeps going up and up and up and up, and they never got back in. They've waited in cash for 3 years and then finally decide to get back in and it falls again.
That's right.
So don't try to time the market. Rather, allow what's called just the time in the market to do its force, which is the compounding of money over the compounding of returns over the long time. Let it just continue to build. It will eventually come back.
Right. And finally, the last mistake is when people try to get rich quick. Again, I mentioned this earlier. Again, Mr. Wonderful mentioned the difference between investing, versus gambling, and you see a lot of people that take it more like going to Vegas and try to get rich quick. So that leads them to do certain things like options and day trading. Jason, you've seen this in your lifetime.
Yeah, absolutely. I mean, and this really, you could say, the getting rich quick mistake kind of falls under all the different categories because it's really the mentality behind it. But it's not. You're not going to double, triple your money overnight and then continue to maintain that. That is just not a realistic expectation.
Right.
The way people become wealthy over time is they make 8 or 9 or 10% over the long run, and that compounded. And then they have a drop, and they stay with it, and they continue to come back, and the market goes up over the long run. So you just that mentality of trying to get rich quick causes people to invest in things like options, where you can make a lot of money quick, or you can lose it all.
Right.
Or they do what's called margin investing, where they're borrowing off their stocks and trying to buy more stocks, which means if the market takes a hit and you're leveraged, you can be forced into what's called a margin call, where you have to sell or you have to bring in money, and that makes it very difficult to invest properly because you end up selling out when you should be buying.
Right.
And doing any type of day trading or futures trading or forex trading, all these things kind of fall into the get rich quick, where they're very difficult to do. It's a very low success rate or a very high failure rate, and it just causes people to lose a lot of money, and they're just chasing this dream.
That's exactly right. So not that the stock market is bad, it's a tool that needs to be used with wisdom and trying to avoid some of the mistakes that can hurt you and really set you back. Yeah. So we hope this helps. Thanks for listening, and we hope to see you soon.
Top 5 stock investing mistakes?
The top 5 mistakes people make when investing in stocks. Welcome to AllGen's Money Minute. So today we want to talk about the top 5 investing mistakes that we have to do again.